You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for episode 2 here of your bi-weekly options extravaganza, known far and wide, hither and yon, as the Option Block. My name is Mark Longo from theoptionsinsider.com. I will be your host, your guide, your maitre d', leading you to your options table for the sumptuous feast that has been laid out before you. If I sound a little bit better, it's because I am feeling a wee bit better today than I was earlier this week, slowly fighting my way back from the precipice that is the modern plague, listeners. But you know what? Neither rain nor sleet nor COVID will keep us from our appointed rounds here on the network. So let's get to it. No preamble today. We got a lot of business to get to, including, let's go out first to the quiet, the sleepy, the tranquil hinterlands known as St. Charles, where we are joined by the uncleest of Mikes, Mr. Uncle Mike TOSAW. How you doing today, sir?
I am doing wonderful. Excited to be here as always, and even more excited that I get to go on TWIFO here in a little over an hour.
Oh, crazy town. Uncle Mike, double dose Uncle Mike today. Crazy town. Let's get to it. First, let's also welcome in a man who's had a bout or two with COVID himself. He's danced with the devil. He is the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the program. And since the last time I talked to you, you've been on a hiatus for about 6 months. Have you gotten any more COVID?
No, I haven't. I think I've gotten every strain that we could get. So, what can you do?
You haven't gotten this fun new one though. It's fun. It's a doozy.
I'll tell you what though. I'd say you're doing well. You didn't really. You didn't even miss work.
You know, the producers here are savage. They don't care if I'm bleeding from the ears, dying. They don't care. They're like, you're going to crack a mic and you're going to talk, damn you. And so the listeners can get what they want. And doesn't matter. You can collapse after, but not during the show. You will survive long enough to do a show. That's all they care about. I'm just a pretty voice here on the network. I'm just the pretty voice here on the air. The producers cracking the whip here behind the scenes as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, let's get to it. It is time to break down the trading block. And man, we got some trading on the screens. In particular, a lot of red. Last week was kind of mostly green until kind of the latter portion of the week. And now we are continuing that red trend into this week, including today. S&P off 1.5%. One of the rare days where most of the indices are kind of hanging out at similar percentage levels. The Dow is also a little bit north of 1.5%. And the NASDAQ's actually a bit of a laggard today, which is rare, only off about 1.3%. But they're all kind of within spitting distance of each other today, which means pretty much right across the board. We'll get to what's going on in all things small caps a little bit later today on This Week in Futures Options. All that red on the screen means our vol friends starting to inhale a little bit again, just a little bit. VIX, when we kicked off the show, was at a 27.65. That puts it up about 1 1/3 points from where it was on Monday's show. VVIX starting to get close to that 100 level again. Not quite there yet, but getting closer. 92.5 when we kicked off the show, up 4 points. VXX 2270, up about 0.4 of a point there for VXX. UVXY was at about 14 even when we commenced operations, up about 0.6 of a point. SVIX, so our inverse friend, 1060, down 0.4 of a point. UVIX 1610 when we kicked off the show, up about 0.8. And VolQ was at about 32.5, up about 1.5 points. Mr. Uncle Mike, I know you got a lot of things going on out there today, so we will toss it to the land of St. Charles first. What is lighting up your tape in today's downward action, sir?
Well, what's interesting to me today is how we have both stocks and bonds down again. We're going back to that kind of the 2022 weirdness of where we actually have no inverseness or no inverse relationship or minimal inverse relationship between stocks and bonds. And so when we have the fears of Fed raising rates and inflation driving down bonds, and then we have fears of inflation and fears of driving up rates, driving down stocks, it's kind of interesting. And just the reason I say that is because the bonds have come down based upon the fact that there's the fear of rising interest rates. We haven't raised them that much yet, but the fear that they're going to, and I think that they will, that's what's driven down the bond prices the way with which they have. I mean, if you look at volatility in the bond world, I'm getting a lot of juice on that 10-year note. There's a lot to jump on that boat of the 10-year note if you're looking for premium. There's quite a bit out there right now. And so it's not because they've already raised rates. It's because people think that they're going to raise rates. And I agree. I think that they will. So that's one interesting thing that I'm seeing. And then the other thing, we're still kind of puttering around. Even though we're down 1.5% today, we're still in the high 3700s. We're around the 3750 or whatever it is range. We're kind of hanging around there. About 3 or 4 weeks ago, we were lower than this. We come up and now we're back down. Seems to be a theme, and we'll see if we can continue to go lower in the markets or this could be the bottom. But the one unique thing that I'm noticing, like I said, is that stocks and bonds are both down at the same time. Now, here's the concern that a lot of financial advisors have right now, and that is sequence of return risk. So in other words, let's say that in theory, you're taking distributions from your retirement account because you need those to live on. Well, if you're taking a distribution now, then traditionally, you could play the game as a financial advisor saying, yes, Mr. Client, take something out of bonds now because bonds have rallied. You can take profits on there and we can wait for stocks to come back or vice versa. But now everything is down. And so there's a couple ways with which you can work against that hopefully your financial advisor is working with you on that. 1 or 3 ways that I like to think of. Number 1, be conservative. So that way there's not a lot of swings in the money that you're taking out. Number 2, what you can actually do is actually work it, meaning some years you take profits on stocks, some years on bonds, but you can't do that right now. Or 3, perhaps maybe have something with an insurance product or something along those lines to where you're not taking away profits, you're not selling at a loss when you need time for it to come back. There's a lot going on with that, and I'm actually a very big fan of making sure you have a plan of how you take your distributions, because there's a lot of people out there right now where everything is down and it's a problem. So hopefully you had a plan for how you're taking your distributions before you actually take them. Because if you're selling the market now and you're counting on the market to come back in 10 years, there's nothing to come back because you already sold some of your stocks. And that can have a ripple effect that can be very damaging. So make sure you plan accordingly with that, folks. And that's what I'm seeing in the markets.
Uncle Mike, if you're concerned about that sequence of returns, I'm hearing really good things about Bitcoin right now. Maybe you might want to check that out. In fact, I have a new website you might want to check out, bitcoinsreallyawesome.com. You should maybe check it out. I think it's pretty cool.
Maybe I should buy that website too and work it as like a straddle.
I'll offer it to you right now. $2 million, it's yours. The low friend of the show rate.
We'll have to negotiate that, but I'm in.
All right. Oh, there you go. He's in. You heard it, listeners. He has committed to pay $2 million for BitcoinIsReallyAwesome.com.
Right. There you go.
Now allow me to go. I have to go procure it. Excuse me while I'm gone for a little bit here on the show. Meanwhile, while I'm going to procure BitcoinIsReallyAwesome.com, the Rock Lobster will regale us with what is lighting up his tape out there today, sir.
Well, I think the big subject is, I will say, chip stocks. And I don't mean like NVIDIA or even AMD. I mean just like the old school, like Taiwan Semiconductor, good earnings, very good earnings, actually. The stock is down $60 from the highs, like most technology stocks, is finding some green today. Qualcomm is up also on those good feelings. So I look at those and I'm like, hey, there's something. What I don't get is just the total destruction of the oil stocks with oil prices so high. So it feels like there's this tendency of the market to get way ahead. And right now, like everybody that jumped into oil stocks seems to be getting out, or they need to get out because they need to sell them to make money somewhere else. It's just a whole big mess. So we're going to have, probably after this earnings cycle, the oil companies will be, trading at a value level because, they're probably selling all the oil they can produce right now. So also, you're not seeing any pivot, I think, from the administration on domestic oil production. So they'll buy oil from everybody else. We just don't want to drill it here, I think, is the thing. And the domestic producers, even looking at XOP, was as high as 170 this year. It's down to 110. So you're like, okay, everybody thought that it had to be done. Clearly, it does not have to be done. So there's some weirdness going on with the oil stocks, considering where they were and where they are now. So, maybe they got ahead. Everybody was thinking this Russian thing would be, be really tough for oil supplies, but it's materialized to some degree, but not to a huge degree, I have to say. I mean, oil prices are definitely higher. I don't know we could blame it all on the Russians at this point, because the Russians just sell it to the Indians or the Chinese. So again, weird. I think there's weird stuff going on. The fact that oil is still basically the oil stock prices, like NXOP and like XLE, they've really broken from USO as far as performance. So that's something to watch. I think it's an opportunity, buying opportunity, meaning buy the majors and short USO. That's a trademark, and I just put on in our Nitro Trader product option pit. So that's an interesting option trade, I think. And the second thing is just like the more low multiple chip makers like Qualcomm, TSM, Intel, all kinds of stuff like that. And to get around Mr. TOSAW's problem, right? You buy stocks that pay like 3-4% dividends. So you don't have to worry about taking profits on those. I mean, you're looking at dividend yields on equities now that are pretty insane. So those are the things that I'm buying right now, because I think growth feels like it's kind of, for a while. I don't think we're going to see a lot out of growth. But the divvies pay the bills. So in a year where you might not see a whole lot out of equities, dividends all of a sudden start to look pretty good. So that's where I am looking currently. And I don't see a reason to change that anytime soon.
Can I interest you in BitcoinIsReallyAwesome.com for the low price of maybe $2.5 million? Maybe you want to outbid your compatriot there. I'm open to bidding wars. Just throw some numbers at me.
I love the Bitcoin thing, but I don't even know where is it right now. Because actually, I've had my students. One of my students has been just doing 1x2 put spreads in BITO, BITO.
Oh yeah, that's a fun one these days. Weird day. It's a weird day, and market's down and Bitcoin's up. We haven't seen this in quite some time.
Yeah, like up 3%, but I just think that the writing is on the wall for Bitcoin in general. Because, and people that ran up with it, right? They're like, okay, I own it and we're making a bunch of money on it. And now they're not. And okay, what do I get for it? What do I have? What's like, and maybe some reality will creep in to the system. And the last thing I will say is, okay, we were down 2% in SPX this morning. And we bounced once again, like that 3,700 area. So like my view here is, unless we have new news that's terrible, 3,700 seems like it's kind of a low area. We might get a little lower, but okay, like we're baking it. Oh, this recession is going to be horrible. The Fed's going to screw up. All this kind of stuff. So, but I think no matter what, rates had to go up because they needed to go up. If anything, to get the government to stop spending $1 trillion a year on basically nothing. So I'm hoping that it works out properly the way it should. So you put rates up, make housing a little more expensive, and start to tamp a little bit of this demand down that causes inflation, and we'll see what happens. But one thing too is you still have 2 jobs open for every 1 person trying to find a job currently. Now, I'm sure that's going to slow down, but that's better than some of the other recessions we've had in the past, where the recession comes because, businesses really, curtail, throw people out of work and stuff. So, and nobody wants that to happen, but, that's what we have. I mean, that's the market we have. So anyway, that's what I see. And, your VIX at a 27, this has come under a lot of discussion with my students, but, vol is just fair here. VIX is 27's fair. Everybody's like, vol should be going up and up and up. It doesn't need to go up because the skew is already adjusted. It's already there to assume vol gets higher as we go down. So just the fact that SPX goes down means at the money volatility rises. So the actual vol per strike, the stickiness of the vol per strike doesn't need to move in order for VIX to rise. And that's where we are. So the market's going down. It can keep going down. VIX will rise a little bit. But, if we're not moving down 4 or 5% a day, right, and those moves are continued and sustained, it's hard for volatility or VIX to get bigger than it is right now. So, but at the same time, it's hard to think you see a reason that we go back to 20 anytime soon. And I have a good stat for you, and I wish Russell was here. Very interesting stat. So 60-day volatility in the SPX. Guess how much it is right now?
We've been whipping around quite a bit.
Oh, I'm sorry. Realized vol. 60-day realized
yes,
vol.
Yes, I meant. Simply like 60-day historical. You do realize I still am coming off my COVID-addled brain.
You're right.
I'm gonna be fun. I'm gonna say like a 42.
Okay. So it's 29%.
I was trying to get you excited. I was trying to get you like some high numbers.
Now,
like we've exhibited a bazillion, technically literally a bazillion vol over the last 60 days. I think is a technical number.
Exactly. It is. It feels like a bazillion. However, only 2 times it was higher. One, when we all thought we were going to die in the COVID era, right? In that basically that 2-week period, that a 6-week period in March and April, and then the Euro crisis. So that's the only other time 60-day vol has been this sustained.
Not even during like Volmageddon, we had that nice.
Nope.
No, wow, okay.
We have not had this kind of sustained volatility before. So it is. So just for the listeners, this is definitely real. Like you have a real sell-off. You have real uncertainty, illiquidity, and all of the big S&P 500 names. So you cannot discount what's going on. So it's real. Is an opportunity, buying opportunity? I don't know. I think it's a great buying opportunity for a lot of really good dividend paying stocks. So the yields now are like somewhere between 4 to 5% on some stocks that I like. So I'm starting to add, because this is what once the stocks get here, I go, okay, I'm going to add a little bit, just every week, just buy a little, until I've kind of had my fill for this level, and then go on and then see what happens. So I think we're kind of, we're sort of there now. Will the Fed kind of mess this up? I don't know. I think they're trying to get rates higher. I think they're just getting rates back to 2007 level, 2006 level. Not terrible. If you make houses more expensive or whatever, I don't think that's a terrible thing given what's going on with the inflation picture we have. So our and right now, again, there's no change in administration policy that I can see that will help alleviate all of these problems. So I think the inflation is going to stay with us for a little while, and we're going to have higher rates, and things are going to slow down. And at least for right now, that slowdown for the market is around 3,700 SPX. Could it get lower? Certainly, but I think we need another shoe to drop to hit a lower level.
Let's see how many shoes are dropping out there today, sir. Let's go out first to the major indices. Let's start in the vol products. Let's go out to VIX, listeners. And you know what? A day where we kind of threaten 3,700, then bounce off of it, that's usually a recipe for a decent amount of volume. That's pretty much what we're seeing out there right now. Already on the tape in VIX, listeners, 631,000 contracts. That's nothing to sneeze at out there, listeners. So VIX putting up some numbers out there. ADV only 479,000. It's actually dropped since our show on Monday. So we are obviously well beyond that now, listeners. And then getting out there to SPY already north of 4 million, 4.05 million. The ADV 7.12. So the SPY ADV looking robust these days. The S. When's the last time we said the S was at 1.5 million contracts already by this time in the show? It's there today, listeners. It's one of those days. There's numbers flying fast and furious here. The ADV for the S now is 2.25. So it looks like the S is going to hit that pretty easily today. IWM, 570,000 contracts on the tape. The ADV is 801,000. So seems like there's some action on the tape in small caps. We'll get to that more a little bit later. On TWIFO and the Qs, 1.5 million contracts right now. The ADV, 2.5 million. So it's a weird day when the S and the Qs have both put up about exactly the same amount of contracts. That's, the S is on fire when it's keeping up with the Qs. In terms of single names, it's a decently active day as well. It's not blowing the doors off, but it's not 120 either. Today, it's actually 210. We have a tie for the number 10 spot. Two names at 210,000 contracts. Number 10, it's Baba. And then number 9 or /10 is also Microsoft right there. Both 210,000 contracts. By the way, we have a comment in the chat here about have you guys been watching GOEV /GOEV? It's funny you mentioned that because that actually is number 11, right outside our top 10 today. It is GOEV, a.k.a. Canoe Inc. This is an American automotive, easy for me to say, a COVID tongue still, listeners. American automotive startup based in Bentonville, Arkansas. They develop, manufacture electric vehicles and plan to sell a lifestyle vehicle in the year 2022. So I guess that means they're not making a truck. That's what a lifestyle vehicle is. They also plan to produce vans for vehicle rental and ride sharing. This is not a name I'm super familiar with, Canoe, but they're trading $4.50, up 96 cents or 27% today. So I'm guessing this is the name perhaps we should all become familiar with. Walmart put a key order in with Canoe. That looks like that's what's popping the stock out there. So in a day when everything else is selling off like mad, you got a little bit of the old meme stock fervor kicking in here again with Canoe, up 27% in a day on a stock that was just below $4 not too long ago. So there's a little bit of the old meme stock love there, even though it is number 11 today, technically outside our top 10. So that sounds like one we're probably going to be hearing about more, as it looks like Amazon and Walmart may be jostling for some orders out there. Number 8, speaking of memes, AMC, 242,000 contracts on the tape for the king of the memes these days. AMC trading $15.30, up about 16 cents or about 1% today. Again, good for 242,000 contracts. And the number 8 spot on our countdown, number 7, Bank of America. Let's see, 248,000 for them. We are kind of getting back in it to the financials. We'll get to some of those in a second. Number 6, the artist formerly known as Facebook, 253,000 contracts. Number 5, NVIDIA, 265,000 contracts. Number 4, AMD, 326,000 contracts. Number 3, the Amazonians have kind of had a death grip on 3 and above ever since their reverse split. Today, it's number 3, 535,000 contracts. Number 2, it's Tesla, 763,000 contracts. And number 1, the big dog holding down its throne yet again, it's the fruit company with 1.08 million contracts on the tape. Let's see what Apple's up to. Apple bucking the trend today, actually up again as well, up 1 3/4, or about 1.2% on the day. So they were selling off to 143.5 earlier this morning. They have since rallied to 147.31. Wow, that's a nice pop for Apple. I'm not sure what the worm is turning on Apple out there, but folks are liking it today out there. So Apple's kind of been the bellwether. A lot of people have been watching. They're going to keep coming for it. It's going to rally right now. It's threatening 150 again. It was trading 130 even about a month ago. So it has rallied 20 handles when the rest of the market has kind of been in a bit of a tizzy out there. It's still obviously a good ways from its high of 183 almost that it hit back, looks like in March timeframe. Excuse me. But intriguing stuff. Apple bucking the trend out there today. Speaking of the trend is back, listeners. If you've been waiting with bated breath for the return of the official earnings season, it is now officially upon us, listeners. So buckle in. It's going to be a fun ride. Tuesday, we had PepsiCo. Wednesday, we had Delta Airlines. And today, it really gets official, listeners, when the financials start popping off. And that's exactly what we had today. We had JP Morgan Chase and Morgan Stanley. Tomorrow, Wells Fargo, PNC, Citi, Progressive, U.S. Bancorp, and BlackRock. And luckily for you, right before showtime, we have hot off the presses from our friends over there at Oratz, the latest earnings move results, earnings season, and earnings trades reports for your reading and trading pleasure. This morning, we had JP Morgan right before the bell. They were nearly 112 going into their announcement. They were pricing in 3.5%. They delivered 4.3% to the dark side. They were at about 107 even pretty much when we ran this report. Let's see where they're hanging out right now, listeners. 107.32. So they've gained a little bit back. So they're closing in with pretty much being about in line with their straddle right now. But there we go. Let's go to Morgan Stanley as well. They were this morning before the bell. $75 is where they were trading. They were pricing in 4.2%. They delivered 1.6%. So they were kind of doing a whole heck of a lot of nothing, which is kind of what we have become used to in the past in earnings time. And right now they are trading at 74.25. So they've rallied about half a buck. So they have moved even less. So not a lot of juice going out there in Morgan Stanley. In terms of big names that are coming up, we got a lot of those. Citi tomorrow before the bell, listeners. 45.5 is where they were trading. They're pricing in $1.59. In the past, they've moved to $1.09. So 50 cents exactly worth of extra juice. Bank of America, the 18th before the bell, 30.84 is where they were trading. They're pricing in $1.39. In the past, they've moved 85 cents. So substantially more vol going into Bank of America. Ally, our friends over there on OPR, Brian and Company. They're on the 19th before the bell. 33.64 is where they were trading. They're pricing in $1.96. In the past, they've moved to $1.38. So about 60 cents worth of extra juice out there. We've got J&J coming up on the 19th as well before the bell. 175.5 is where they were trading. They're pricing in 385. In the past, they've moved about 370. So not a heck of a lot of extra juice going on there. Let's go out to next week. Let's go out to a name a few of you may have heard of called Tesla. They're the 20th after the bell. They were trading $7.11 and change as of this report. They were pricing in $52.85. In the past, they've moved $45.92. So yeah, a decent amount of extra juice, but it's Tesla, so you can always usually expect some extra juice in Tesla out there. Again, we got all these hot new earnings move results. And indeed, the earnings season report, listeners, it has commenced. We have a whopping 3 names reporting so far. Mr. Rock Lobster, I'll give you a chance to guess. Where do you think the earnings season is stacking up right now in terms of percent. 100% is obviously everything is moved in line with their straddle. 200% is we've doubled the straddle. 50% is our straddles have been cut in half. Where do you think, with the first three names of the season, where are we stacking up right now, sir?
I'm going to say on a percentage base. So I get 50, 100, or 200 of my choices.
You can be anywhere. You could be 36% if you feel like.
I think we're probably performing at 75% of the straddle.
That's not a bad guess. It's actually almost exactly double that, 150%. So we're blowing the doors off to start the season this year.
Oh, my word. Clearly the COVID has not robbed you of your wit and sense of humor.
See, that's the last thing to go, they say. You lose your sense of taste, not your sense of humor with the COVID. So, yes, three names. Read into that what you will, listeners, but at least was enough to stump the Rock Lobster. Let's go out here really quickly to the earnings trades reports. We still are monitoring 52 long straddles, 22 short straddles. I think they took a few of those off, and 42 long calendars for your trading edumacation out there. No exits or entries today, so we got the same number on. I'm sure we'll be rocking and rolling there pretty soon as well with new entries and new exits for your reading and trading pleasure. Meanwhile, though, it's time for us to unleash the beast. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right. Thank God for my mute button, listeners. You don't hear the coughing fits that go on during the transitions. But I'm back to my usual sense here, even if my head is ringing a little bit, as we get on into Mr. Rock Lobster. Are you ready to dance? We've got your first name here, your favorite name. I do believe of all the tickers we've ever talked about, this is your favorite. This is, of course, Telefonakti Bolage LM Ericsson ADR Class B. Are you ready, sir?
That is such a mouthful. I don't even know where to start on that one.
Let's just call it Eric, ERIC. This is, of course, Ericsson. We don't want to know there. We'd use their less wieldy Swedish name. Let's just call it Eric. Trading right now, $6.76. Really quickly, we talked about it recently. If it sounds familiar, you'll see why in a second. A year ago, his name was trading 13.25. That was pretty much the high for the year. It kind of sold off to about $10 in December. Then it rallied again up to about $12.70 on February 8th. Then it gave it up again down to $7.71 on March 7th. And it's been bouncing around in this kind of $6 to $8 range pretty much ever since, obviously on the lower end of that now. And that hit its 52-week low today, actually. It did. 668 this morning. That was the 52-week low on Ericsson. So a bit of a spoiler as to what's going on out there. Because listeners, on our last show, as you'll recall on Monday, we talked about a massive put palooza in Eric. We first saw a block of 14,452 of the July 7 puts going up paper. Looks like they were probably buying those for 24 cents. Then we saw more blocks going up around it. We saw another about 5,000 lot going up, lifting the offer for 20 cents right before it. They were, I believe, a dime at 20 when they were a dime at 20. They paid 20 cents, and they kept pretty much moving this market up because they were gobbling them up. They bought another 1,000 on splits for 22.6 cents, 14,000. Total of 22,000 traded on the day. At the time, the stock was around $7.36. And it seemed like Mr. Rock Lobster, somebody was really not feeling a lot of good things happening for Ericsson over the course of this week. They had earnings coming up today as well, so that's also maybe probably why they were a little bit concerned. And it seems like Mr. Rock Lobster, that spookage was merited because, as I mentioned, they hit their 52-week low of $6.68 this morning. So these 7 puts, the stock right now is about 677, so it has rebounded a little bit, but 677, it's pretty much right at that break-even level for these puts. In fact, they've been trading pretty hot and heavy for 25 cents today, which is right around break even for these puts out here. So Mr. Rock Lobster, somebody scooped up a bunch, about 22,000 of these July 7 puts earlier in the week. They have earnings. Earnings are clearly no bueno, and the stock kind of falls out of bed. And now they're sitting on some puts that are kind of just barely in the money. What are your thoughts, and what do you think they should do with these bad boys now that they've gotten the move that they've gotten, sir?
Well, you know what I realized is if you want to be in the 5G game, probably better. It's more profitable to make an app than actually make all the gear to make the 5G networks go. So you look at a stock like Ericsson and Nokia and all these producers and Cisco, and wow, all this 5G stuff is great for everybody, but all their stocks are in Palookaville. You know what I mean? So I would just say this one. This is the news is bad, and this is as low as you go. So personally, I would be looking to hit some of the exit on these bad boys. I try to get out of them a quarter, but it's just that you're not, this isn't a very volatile stock. And if you're not getting the move at this point and you own these bad boys, I think you want to try to be getting out. I mean, look, because it's right there at the strike. It's probably one of the worst places, that the trade can be. But I would start to look for the exit somewhat at this point.
Yeah, you got to be getting the heck out of Dodge right now. You're hovering at the strike, so you're just decaying like a madman. It seems like we've seen the extent of the downside move, and once we've seen that, that's it. The vol comes cratering in. Yep. I just happened to look while you were talking to see if our friend is taking that advice, if they are dumping these, and unfortunately, only 1,063 have traded today, Mr. Rock Lobster. So it seems like they're holding on for dear life. I'm not sure what for. They got one more day to go. They could be laughing all the way to the bank at us tomorrow, Mr. The stock could be $5.20 tomorrow. Who knows? But yeah, I think if past is prologue, listeners, you got to start getting the heck out of Dodge, at least of some of these. When you have the move you were paid for, and maybe not quite to the extent that you wanted, but you got something. That's it. That's pretty much looks like that's what you're going to get. And you only got 24 hours left. The clock is ticking. You're hanging out near at the money. So your options are decaying at a near exponential rate now. You got to get the heck out of Dodge and get while the getting is good. The getting would have been even better 20 odd cents ago, but c'est la vie. Start getting out now, folks. They only got 1,000 off. So I would hate to have this move happen and they waste kind of all their money, but we have seen this movie before, unfortunately. Perhaps we are sitting on that one yet again. Let's go out to another name that we've talked about before, Mr. Rock Lobster. It's been a little bit, though. This is Rio Tinto PLC. This is an ADR out of the UK. Ticker symbol Rio. I haven't talked about good old Rio in a while. Let's see. Trading $54.35 right now. A year ago, it was trading 85 3/4. Hit its high for the year of $89.50 on August 3rd. Then it gave up the ghost pretty hard, got down to about $60 on November 17th, before rallying again all the way up March 3rd, hit 84 again, hung out there for a little while, sold off again in May to $65, then rallied yet again on everyone's favorite day, listeners. June 8th, hit 78.5. And that was kind of it for this name. Ever since then, it's been straight down to where it is right now, $54.35. Another name that looks like it touched, yeah, it did. It touched its 52-week low this morning of $54.22. What did we find out here? More crazy put paloozas as the stock is giving up the ghost? No, looks like it is the opposite, listeners. Someone's deciding, you know what? This Rio has been beaten up far too much. It is time for some old school meme stock upside. In particular, it's the July 56.88. I love these strikes. Obviously, there was a corporate action out here, listeners, maybe a divvy. They picked up about 3,000 of these for 25 cents, just straight lifting the offer. That's a 73.5 vol. The stock was, let's see, where was the stock? The stock was a little bit higher. The stock was 54.78 when these went up. And then they came back in. They liked them so much, they did about 5,000 of these today. So, Mr. Rock Lobster, this is kind of a bit of a warm fuzzy. It's kind of old school paper from like a year ago. Everybody was just buying calls and everything. This time it's folks loading up on about 5,000 of the easy for me to say, 5688 calls in Rio Tinto PLC. What say you, sir?
Again, the commodity stocks look a lot like the oil stocks, just smeared beyond all recognition. So I'm looking at commodity stocks. I'm like, wow, they're super cheap, right? They look super cheap. And I think they could be quite a bargain if the globe can digest this huge, it's kind of like a snake digesting a frog after this COVID, of this huge amount of debt all these countries took on for these COVID policies. And right now, everybody's like, we're going to be in a recession, and it's going to be horrible, and it's going to be long, and it's going to be terrible. I guess so. It's certainly possible. I don't think this is a bad idea, although this is a very difficult market to buy calls in and win. You have a high vol, like I said before, high realized vol. You're not really getting a trend one way or the other. We're stuck between 3,700 and 900, and they're buying short-term 5688 calls in Rio, paying 25 cents.
Yeah, they're not giving themselves a lot of time to work.
They are not, and it doesn't mean it can't. But you're going to need a pretty solid rally to make these things pay. A bounce-a-rama, as it were, up to 38, 3,900, or some sort of snapback. I mean, I don't see it with the commodities yet. I think, again, if you want long-term dividend-paying stocks, probably worth dipping your toe in the water, which I'm doing currently on a few of the stocks that I follow, because they're down 50% from their highs, and commodity prices are still pretty expensive. They're not as high as they were, but they're still pretty expensive. So again, when you have high vol, I would say if you're going to make money buying calls, it's going to be short term, because you get that one pop that one day, where Rio just goes, whoop, it's up $4. And they'll get out of these calls for maybe $1. So they got the shot, but they're already down 15 cents. So that does not pass our first option block sniff test of, you buy calls one day and you're already down 50% on them. That doesn't bode well. Or down 40% does not bode well for your future prospects.
Well, how do you like the prospects of rolled aluminum, sir? Because that's where we're going next. Yep. We're going back to our old friend, our old favorite, Constellium SE, ticker symbol CSTM, the global manufacturer of rolled aluminum, listeners. It's that time. We talked about these a little while ago on the show, about a week ago, overwriting in Constellium, ticker symbol CSTM, listeners. We talked about someone dumping quite a few, 18,683 of the July 14 calls, pretty much crushing the bid for about 22 cents. The stock at the time was $13.44. So these were straight up out of the money calls. It was about a 57 vol. We didn't hate this. This was kind of just harvesting a little bit of the old near-term premium. And then if you had some stock to go, you didn't mind dumping it. You weren't too upset about it. Let's see. Over the past year, Constellium was $18.70 a year ago, rallied up to its high for the year on September 3rd of about $21.60. And then it kind of hung out in that high teens, low 20s range for pretty much the rest of the year. Started trending south around March, got down to about 15.5. And then tried rallying again on June 8th, actually, of about $17.5, and that was kind of the near-term high. Then it kind of gave up the ghost. Sold off to $11.79. That was this low for the year on June 23rd. Has since rallied a little bit, got up to $13.5 before kind of trending back down to where it is right now, $12.77. So this person wasn't playing around. They were getting their near-term 22 cents, and they weren't thinking that Constellium was popping anywhere near the 14 handle. And like I said, right now the stock is $12.77. So it looks like it is trending in their direction. The stock has dropped 70 odd cents from where it was when they wrote these calls. So the stock needs to pop quite a bit in the next session or so. It doesn't seem like it's going to happen. These calls are obviously still open. So it looks like this is going to work out. They're going to make a nice, cool, about 400 grand, Mr. Rock Lobster. So a little bit more than your significant others. You can get almost 2 Ferraris for this, sir, if you play your card right. Maybe one's used.
Which is the magic of the buy right? You have a market like this. Market goes up, market goes down, and you write your calls and you make your money and you go on. So I think buy rights are great to do in bad markets, and they're not good to do in bull markets. That's my own personal thoughts on that. So there we do. Somebody is going to have, some lucky girlfriend is going to have 2 nice looking Ferraris in their driveway from this.
You don't know. Could be a nice kept man hanging out as well, saying, "Woohoo, Ferrari!" You never know. You never know out there, sir. We don't judge.
You know what?
Ferraris
you're right.
For all. It's like Oprah. Right. You get a Ferrari, and you get a Ferrari.
It's 2022.
You get a Ferrari.
Girlfriends, boyfriends, they all get the Ferraris.
Everyone gets a Ferrari. You know what, listeners? You get to ask your questions. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block, the portion of the show where we take your questions, your comments, your insights, your pearls of wisdom. We got offers in the chat to offer me 2 million Shiba Inu for my BitcoinIsReallyAwesome.com. I don't think I'm going to take that because that's about, a couple of cents. But I appreciate the offer nonetheless. We have our question of the week rearing right now. It's time to spread your options trading wings. In particular, which spread with wings is finding its way into your trading arsenal right now? I gave you 3 choices plus the infamous other: Iron Condor, Iron Butterfly, Traditional Butterfly, or Other. And we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW. Mr. Uncle Mike, sir, which of these spread with wings do you think is lighting up our audience's tape right now?
I'll say for the audience, the Condor. For me, you know what? I'm thinking Iron Butterfly right now. I'm just in an Anagata Davida kind of mood.
Look at you, Ironfly. Have you ever actually traded an Ironfly?
Not often, but I have. I'm not much of a fly man, but I do them.
I was going to say, I
do them at
don't
times.
see you as a huge Ironfly guy, but hey, you never know. I'm always willing to be surprised. Mr. Rock Lobster, same question for you. Iron Condor, Ironfly, Butterfly, or Other? Which one are you voting for? Which one do you think our audience is voting for?
Actually, does the audience know they're all the same trade? It's just you change the strikes?
That's pretty much what they are, yes.
Yes. Okay. Anyway, I am saying our audience is going Iron Condor. Myself, I have Iron Butterflies on currently, so that's what I'm going to say.
All right, let's see what the folks are up to out here. And you got about a day left, listeners, in our question of the week. And Iron Condor kind of ran away with it early. It is starting to fade a little bit. Butterflies starting to come up in the rearview mirror there. Iron Condor is still winning right now with about 43% of the vote. But right behind it, Butterfly, number 2, with exactly a third, 33.3% of the vote. Then we got third place is Iron Butterfly. So Traditional Butterfly is second. And then Iron Butterfly is third. And then Other, the infamous Other, about 5% there, listeners. You got about a day left. Make your voice heard if you agree or disagree with that assessment. Let's go to this question, kind of a bit of a left field one from Nantic. He wants to know, where is the true capital of options trading in the U.S. now that people can trade options from anywhere? I guess that's an interesting thought kind of question. But yeah, traditionally, obviously, the capital for options and all derivatives in the U.S. and around the world has been Chicago. There's a reason for that. We have, obviously, listed options were kind of created in Chicago with the Chicago Board Options Exchange. We also have 3 massive derivatives exchanges, the Board of Trade, CME, and, of course, the CBOE. So from any perspective, from volume, from certain products, whichever way you want to look at it, however you want to slice that pie, Chicago was and is the big dog. So it remains that way from an ecosystem, infrastructure. It's all still there in Chicago to a greater extent than anywhere else on the planet. But that said, there are other ways you can kind of slice that pie now, including Mr. Rock Lobster. You weren't on the show on Monday, but Uncle Mike was asking. We did our mid-year checkup for the Google Trends data, how options trading, all those kind of traditional search terms, how they are shaping up for the middle of the year. And we did our check-in for the number one options search destination in the U.S. And, Maine had that spot, and then you kind of relinquished it. And Uncle Mike was asking, where is the new hot spot? So we did some research. We revealed the answer on Monday's show, so I want to ask Uncle Mike. But Mr. Rock Lobster, if you had to guess, where is the number one options trading mecca, at least from a Google Trends perspective, sir? Where do you think it is?
Options trading mecca. I'm going to go Texas.
Interesting. Uncle Mike, you want to set him straight with the answer? Do you remember what it was?
The Rainbow State,
yes.
Hawaii.
Yes, Hawaii is the number one.
It's only got like 8 people.
Exactly. So one of them was obviously searching for options, and per capita they blew the doors off. So there you go.
And they're winning.
1 in 8 people in Hawaii are searching for options right now.
That's quite something.
So there you go. Anything you want to add here for Nantic? He wants to know, what is the true capital of options trading in the U.S. now that people can trade options from anywhere? Clearly, it is Hawaii, sir.
Yes, Hawaii, but Chicago is always the capital. Even though the SIBO is no longer at the old SIBO, it's at this new fancy building. I have to say though, I can't even imagine how much they spent to redo that post office building above Congress Avenue in Chicago. It's impressive. It's impressive how much dough they put into that thing. So anyway, I'm going to still say it's Chicago for right now, until of course Citadel leaves.
Yeah, that old post office has been like the largest piece of, downtown real estate that has been empty and fallow for decades. They couldn't fill that thing. So I'm guessing SIBO didn't shell out a lot of their own hard-earned cash. I'm guessing the developers in the city probably kicked in a bunch to keep that spot viable. That was going to be a million things. That was going to be a downtown casino. That spot is enormous that they're in, which ironically is right down the street from our studio, listeners. So the SIBO moving even closer to the Options Insider empire. Mr. Uncle Mike, anything you want to add here for Nantic? He wants to know the true capital of the U.S. options trading, which is clearly, we've all decided, Honolulu, Hawaii.
Well, I've always said Chicago's the home of the Bulls and the Bears, and I'm not talking about the sports teams.
You're talking about the women's NBA team and maybe some minor league baseball. Is that what you're talking about?
No, try again.
Oh, I'm close. I think I'm in the ballpark there. I'm just throwing the puns out like crazy here in my COVID-addled brain here, listeners, as we keep on rolling. Yes, obviously Nantic. From most perspectives, it still remains Chicago. But if you're the guy or gal who's out there on your back porch or on the beach with your tablet or smartphone and you're trading it up there, then for your perspective, it's right there. And as long as you're having fun and doing all right, who am I to judge? As we keep on rolling right into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show we break down what we're keeping an eye on for the rest of the week into the weekend. Let's start with the Uncle List of Mikes. Mr. Uncle Mike, sir, a lot to unpack. We didn't even talk about the apocalyptic inflation numbers that were coming in earlier this week that seem to be spooking everybody these days. What are you keeping an eye on for into the weekend until we can gather here together on Monday's show, sir?
I'm just watching the numbers of the S&P, seeing if we make a new low. I'm not sure if we will or not, but just watching that at this point. All the news and all the craziness is out there. So what's the actual money going to do? That's what I'm watching.
Never say all the craziness is out there, sir, because there's always more craziness to come. We've never seen all the crazy. We've learned nothing over the last couple of years, is that there's always more crazy in the back pocket somewhere. So be careful. Be careful what you unleash upon the world, sir. Let's go out to the rockingest of lobsters. Mr. Rock Lobster, sir, what are you keeping an eye on as we head into the weekend, sir?
Again, I would say, okay, how are the earnings going to be? We've got another, we're getting hot and heavy here into the first week of August when earnings season essentially ends. So I'm looking at that. I think the big banks kind of set the tone. They're putting a lot of reserves away because they're like, hey, everybody's saying recession, so we're going to reserve a bunch of capital and batten down the hatches. And I'm looking at how oil reacts I'm looking at how VIX reacts. Again, VIX is only a very small move today, but not surprising since we had no sustained drop in the S&P 500. And so again, the more that news comes out in general, the less is uncertain, and vol generally drops a little bit. But 60-day vol is 29 in the SPX. So, I see short-term vol has come down a bunch. So maybe we'll see more vol coming in. But at least for right now, I think our movie is 3,700, 3,900 until the Fed speaks its piece. Again, raising rates, I'm going to guess probably 75 or 100 basis points come July 25th.
All right, and that's going to do it for us here on the old option block today. But if you need more in your ear holes, never fear. We'll be back in a little bit. In fact, I do believe I'll be joined by the uncleist of Mikes, Mr. Uncle Mike TOSAW, to break down the wild world of futures options in about half an hour. But before we do that, or perhaps if they're not going to have a chance to listen to TWIFO this week and they Uncle Mike and they want to get a little bit of Uncle Mike in their lives anyhow, where should they go? What should they do?
Check out my YouTube channels. Go to YouTube, type in St. Charles Wealth Management. I try to put out a lot of videos. Feel free to visit my website, stcharleswealth.com, or follow me on Twitter at Mike TOSAW, TOSAW.
And Mr. Rock Lobster, same question for you, sir. Folks want to get access to all that option pit, easy for me to say, option pit goodness. Where should they go? What should they do?
Yes, go to optionpit.com. We'll call 888-TRADE-01 for Ted, although he is out this week. He'll be back next week. And ask for all the courses that Andrew does, and just become one of our pro members. Get everything Option Pit has, and so you're kind of a live, immersive environment for trading options. And that is it. And again, if you say heard it on the Option Pit show, the option block, you get 10% off as long as you say that Andrew G is the most handsome man in options. And there we go.
Poor Ted. Man just gets lied to constantly. Lie to him for yourself at optionpit.com. On behalf of the Rock Lobster and the uncleist of Mikes, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for giving us a listen today, spending some of your time with us today. Back again in a little bit for TWIFO. If you're one of our many on-demand listeners, hit next on your device of choice. If you're listening live, we'll be back in a little bit. Pump some fun stuff in there. We'll be back in a little bit for some live TWIFO goodness. Back again tomorrow, noon Central, 1 p.m. Eastern for volatility views. Then after that, for all you cool kids in the secret club, back again for options oddities after that. Then we're all back again next Monday. Another episode of The Option. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.